What's up, guys? What's up? What's up? It's Tickers here, back with another video. In today's video, guys, I want to talk to you about a Jim Cramer video I just seen. Let's pull it up right here. Cramer is looking bullish on cloud computing stocks. Go check that out. Jim Cramer, I know he's a bit of a meme, man, but hey, he's seems to be looking at a lot of the cloud computing stocks today. He said the ETFs in particular. He said that a lot of them are running right now. We're going to check out this video and see what he's got to
That
say.
insane run after the October Consumer Price Index came in slightly cooler than expected, telling us that the Fed may be winning its war against inflation. It was the best day for the averages since the spring of 2020. Now, it really impacted the NASDAQ, which was up 7.3%. For the last year, also.
NASDAQ's up 7.3%. Oh, let's pull that up. Oh, I didn't even look at the NASDAQ. Let's look at the Qs. Take a look at the Qs, y'all. See what we got. Yeah, NASDAQ was up 2% today, y'all. $5. Wow, that's crazy. That is a big move. That is a big, big move. Holy man. Oh man. Yeah, look at that. It's up 2%. And let's see what else we got here.
Sorts of speculative stocks and richly valued growth names have been obliterated. Why? Because when they become much less attractive in a rising interest rate environment, like we sure have had. But if the Fed can ease up on the tightening, these groups do come back in style in, yes, the Wall Street fashion show. But this spread.
Yeah, it'll come back after, the interest rates start to lower down and they start to get inflation under control. But the market's going to be trying to price that in ahead of time. The market always does this, where it thinks it tries to get out 3-6 months ahead. It tries to predict what's going to happen, 3-6 months ahead of time. And then the hard part about that is this Fed is that it's just you don't know what they're going to do. They don't know what they're going to do half the time. They're really inconsistent. Oh, they're consistently inconsistent. How about that? Yeah, they'll say, have one chairperson say, like, oh, we're going to lower the rates or we're going to pause them. And you'll have Powell turn around and say, no, we're going to get inflation back down to 2%. That's what we got to do. We're going to do it. And it's just, can we just get some clear answers here? We need everybody on one page ahead of the interest rates. But that's all the market really can go on is the interest rates and inflation data. So when we came out with the inflation data at 7.7 the other day, it just sent the market on a run, and
it spread to everything speculative. Even cryptocurrencies had huge runs yesterday, despite the collapse of the second biggest crypto exchange and what many are calling a Lehman Brothers moment. Now, wait a second. Is that really rigorous? Tonight, I want to talk about the cloud, where it just exploded higher. All three major cloud ETFs had their best day ever. Imagine that. The Wisdom Tree Cloud Computing Fund up more than 13%.
The Wisdom Tree Cloud Computing up 5%. I just showed you that the NASDAQ was only up, 2? And you got a Wisdom Tree up 5%, man. So for anyone who doesn't know, cloud computing is basically where you get the servers in like a big farm and they store data online. Think of like how Google, Amazon, Microsoft all have these services online that you can use. Like Microsoft's got their Teams and stuff like that, and you can use like OneDrive for storage. It's the same with Google. It's got like the what's it called, Google Drive or something like that. Yeah, and I think Apple's got one too. I'm not sure what it's called because I don't use Apple products, but nothing against Apple, not at all. I hold a lot of their stock, so just keeping it real with you. I like Apple as a company, but outside of that. You see, the cloud computing is doing pretty good, man. It's up 5%, and that's an ETF. I want to stress that, this is an ETF. So an ETF is a whole big basket of stocks. So this is probably like 30, 40, 50 stocks probably, maybe even more. And this thing is up 5%. That'd be a big move, even for like just one individual stock, just one stock. But a whole basket of them to move like that, yeah, that's very
It's really stood out to me because the cloud-based software stocks have been under the most immense pressure of all the market, not just for the last year, but actually, especially since the last week, literally last week. Today, we had a pair of big names, Atlassian and Twilio, one-time big favorites. Both reported awful numbers and saw their stocks get eviscerated and took a lot of others down with it. Now, I've been warning you away from all things software as a service for a while now.
Good old SaaS model. That's a sticky business model, man. As well as the reason like a lot of these tech companies resort to that is because it works, man. People keep people paying a subscription, and they'll continue to pay it mindlessly. You know what I'm saying? Like it's just sticky business model. If you really got good products and you got a good service that people really want to buy, man. So I say let these stocks keep coming down, man. If this bullishness ends, let them come on down, and I'll be happy to pick some of these stocks up, man. I mean, these are stocks that are prepared for the future and going to be doing very well in the future. If you look out 5-10 years from now, so
because so many are faltering or losing big money. But there are some quality companies in this group that I think would be worth owning if we could figure out when the cloud names might really be ready to bottom. Now, I'm not sticking out my neck yet to make this call because the industry is.
Oh, come on, Cramer. I know you want to. Go ahead and give us a bottom, Cramer, because, I mean, we all know how you are on Twitter, man, where you tweet something and the opposite happens. I mean, shout out to all my inverse Cramer people out there. Y'all probably make a lot of money, but anyway.
So, hey, more important, just this earnings season, the cloud plays have started to really feel the impact of a slowing economy. That's new for them. They've usually been so strong that they've been overcoming the economy. But
yeah, you're seeing inflation also hit. Like I had a video yesterday, day before, that you had a retail sector saying that they're seeing inflation starting to come back down a little bit, and I'm noticing more and more sales going on, especially in like clothing and stuff now, man. Like stuff, inflation might have actually peaked. I don't want to call it, but it seems like inflation finally starting to come back down to reality. Hopefully it has. Hopefully it will soon. If you've been listening to anything from Kathy Wood, she's been calling for massive deflation in the next year or so, next 3 to 6 months. I think she has it as. I don't want to quote her, but and she said that all these retail stores have a big inventory glut, so they're going to have to cut prices just to get rid of all that inventory.
But they're giving you shortfalls and forecast cuts because of macro weakness. The fundamentals have generally gotten a lot worse. That's why yesterday's cloud breaking, it was striking. Unfortunately, I think this is a case, and you see this a lot, where Wall Street has gotten ahead of itself. Yesterday, we got a glimpse of what the market might look like when the Fed's finally done raising interest rates. The problem is, they're not done.
Yes, thank you. He's right though. I mean, they're not done raising interest rates. I mean, they might slow down. That's yet to even be seen. But the market's already acting like they're just done raising interest rates forever. There's no talk of even a pause, never mind a pivot. So we'll have to wait and see. If anything, they might be less aggressive, maybe just a wait and see approach, but even that remains to be seen, man. Just keep that in mind. They're still being very aggressive with these interest rates as of right now.
Inflation might be moving in the right direction, but it's still very high. The Fed likely won't hit us with another 75 basis point rate hike, but they'll almost certainly keep tightening, maybe 50 basis points, maybe 25. Frankly, yesterday's rally felt a lot like a short squeeze for some sections of the market, where the bears have convinced themselves that nothing good could ever happen. Then we got a positive CPI reading, and they rushed for the exits. To rush for the exits, if you're them, means buying stocks to close the short sale. So I don't think this run in the cloud stocks is necessarily sustainable, especially when it comes to the one.
I wouldn't say it is. I do expect them to come back down sooner or later. I mean, you even got cryptos running even after this massive FTX blow up, and like all these people fearing bankruptcy on all these other exchanges, and crypto's still higher than where it was. So I mean, it's just a bit of a delusional market right now, y'all, and you can expect a lot of these stocks to come back down. I want to bring up the price charts on some of these stocks here in a minute.
That aren't profitable, and those are the ones I always tell you in the lightning round, don't touch. And that's why I recommend using this incredible rebound actually as a rare opportunity to sell the weaker cloud stocks into strength. If you were trapped in these things, this is giving you a chance to get out.
That's entirely up to you if you want to sell your stocks or not. If you believe in them long term, I say just hold them and you keep buying them, man. I mean, if you've done your homework and your thesis checks out, and nothing in the news or the media cycle has done anything to change your thesis, just keep on buying these stocks, man. Just do what you want to do. It's your money. No one can give you financial advice unless they're a financial advisor, which I am not. So this is not financial advice. But at the end of the day, it's your money, man. Don't let nobody tell you what to do with your money. But that being said, let's take a look at some of these cloud stocks, like some of the big techs like Google. It's actually up 2.73% today. You got Amazon up 4.25% almost. You got Apple up 2%. You got Microsoft up 2%. NASDAQ, like I said, also up too. So a lot of the big techs are up to anywhere from 2 to 3 or 4%. So yeah, you're seeing a lot of the big cloud names really move up higher, and these stocks are going to do well in the future. Like you know many of these names like Apple, Amazon, Google, Microsoft. I mean, like you know these names. Like they're, I mean, they're just I mean, they're household names. Those are the companies I like to look at. And like you said, you want to stay away from the unprofitable ones, but these companies have always been, like I said, always been profitable. But because especially Amazon, it only just recently became profitable. But like Amazon, I mean not Amazon, Google, Apple, Microsoft, yeah, these companies have been around for decades, man. They've been profitable more and more and more every year, and I don't expect that trend to stop. So if they keep coming down the way they have been this year, I will gladly pick up more and more of them. But that's just what I'm doing. Yeah, I don't know what you guys decide to do. Like I said, at the end of the day, it's your money. I don't. You see, I got small positions in a lot of these stocks on here. I don't. I don't really invest on here a lot, but I will come on here and talk to people if they want to reach out to me. If you also want to reach out to me on Twitter, you can find me at Chris Mike Duncan. That's at Chris Mike Duncan on Twitter, and you'll see the stickers and tokens with the rocket and all that. It's all on there. And yeah, guys, that's pretty much going to be it for this one. I just I just wanted to make fun of Cramer a little bit. I actually agree with a lot of the things he said. I just wanted to see what he had to say about cloud stock. So I'll catch you guys in the next one. Take care.